Hello everybody and welcome back. Well, we're just 24 hours away now from one of the biggest bits of news that comes out each month in the US economy. It affects stocks, commodities and cryptos in a major way, and that's why markets are moving to resistance points or support points, depending on the market you're trading, ahead of this big bit of information. We'll be talking about what that means, along with if we break through, where we could be going next for these markets. But the big thing I think that's happening right now is sentiment. We're seeing a shift in sentiment in the market. The underlying is changing. People are starting to buy back into tech. Now, is that retail or is that the bigger players out there? Stay tuned as we break down some of the key figures that we need to be looking at, including something that tends to happen while we're basing in terms of market bottoms. See you soon. This will be a good one. Well, welcome back everybody to the Daily Show where we talk about stocks, commodities and cryptos. I thought we'd start with US 10-year Treasury yields. As you can see here, oftentimes bond yields peak prior to equity market bottoms. Now, it doesn't mean they happen at the exact same time, but we will be looking at some charts later in today's video to give you a bit of an idea how this can help us form a thesis for the longer term bottoms and actually trying to pick a bottom, which is of course incredibly hard. Now, if you've ever seen an interview with Warren Buffett where he talks about obviously his investments, sometimes they'll ask him a question, what indicators do you use? Now, obviously he doesn't use too many of them, but he will say he watches the US 10-year. Everyone on the street does. It's an important indicator, and we'll show you how to have a look at it a little bit later on. Let's talk about spending in the US. What's going on right now? Well, it's probably likely we're already in some form of US recession. Usually the word recession is overrated. By the time the word recession is used to the point where it's guaranteed we are in one, the market's already done a lot of damage. And that's what's happened, of course, so far in 2022. Let's look at the spending, though, of what people expect to be spending on in the future. Isn't it interesting? Grocery more than the last 3 months. So people expect to spend more in grocery. That's why you often see markets go to the staples. That's the defensive sector. The markets already know this, so these particular sectors tend to do pretty well. Interesting that leisure and vacation travel actually comes out pretty strong here in terms of more spending than the last 3 months. And down at the bottom, accessories, and look at this, food delivery apps. You probably don't want to necessarily be in food delivery anymore. Maybe it's time to get in the car, drive to the local pizza shop, and pick up those pizzas. I don't know if most of you do that, but actually let me know in the comments down below. Do you still go old school? Or do you actually use the delivery apps? Let's talk about the indicator we spoke of previously, which was manufacturing new orders versus inventories. Now, this usually means we're in a recession. Ultimately, we've hit the big number here. A lot of the times, in fact, the last 5 times it has meant we've already been in a recession. It doesn't really help us as traders and investors that much, though. Being in a recession, what does that mean? Well, we can look for the average of what a recession pulls back to, 32% on the SP 500. It doesn't help us too much, but it's still a great fact and a great figure that we put there. This is where things do help us, though. Let's look at the sentiment report coming out here. It looks a little bit bearish, actually more bearish than I thought. I didn't know so many people were so bearish on the market. We've been short-term bullish here over the last 2-3 weeks. And the main reason is because it looks like the market is bottoming for a little bit of a return. It makes sense to some of the other stats we'll show you later. But check out the most recent sentiment report. 52.8% of people were bearish, 27.8% of people were neutral, which is higher than normal, and only 19.4% were bullish. Now, usually when this has happened, we've actually rallied in markets. That is, when everyone's been bearish, the markets have rallied. The technical analysis turns around. We see it. This just gives us clarification for what's occurring. Because remember, the averages, 38, 31, 30, usually it's split more towards the bulls. And the market can be usually moving the way it wants to. But 52.8% bearish, not necessarily that stellar. Let's talk about why that could be and why the market might actually be going up here. First 2 weeks of July, very, very strong here. If you notice, the first half of July tends to be the best month or the best 2-week period in the start of the year. Now, can anyone guess, if you pause the video right now, put it in the comments, can you guess why heading into the first 2 weeks of July, we tend to bull? I'll give you a hint, buy the rumor, potentially sell the fact. Yes, we're heading into earnings. And that, of course, could be a massive thing. Let's have a look at an economic calendar now for some of the stats. the stats are that generally July kind of starts a little bit bullish. Then we go into the 15th. Now, the 15th is options expiration. That is the third week. Now, this particular options expiration day, you'll notice it has a little nasty picture of a bear on it because it tends to be down. You'll notice also after that, July begins the Nasdaq's worst 4 months over history. Now, what are we expecting out of earnings? Well, of course, the street already expects pretty poor earnings. Maybe it's going to become under expectations. And once we start to see this in the charts, I think it could be very, very interesting. Could this be the turning point for the markets? We go a little bit bullish here, and then suddenly we go mega bearish after the earnings starts to come out. The big banks come out, give profit warnings, etc. I think this is a great time to talk about the sponsor of today's video, which is of course Tiger Brokers. They've got an amazing promotion on right now, a special offer, especially for Australian viewers out there. If you're interested in getting hold of some extra stocks, well, you can do so by opening an account with Tiger Brokers. We'll have a look at the platform in just a few moments, but here are some of the bonuses that you get if you open an account with Tiger. Let's take a look here. We've got, of course, live US streaming market data, and more importantly, in-depth market data, level 1 and level 2 data, guys. This is this type of stuff that you want to be seeing on your charts. If you're in America, if you're in Singapore, if you're in Canada or anywhere else in the world, it doesn't matter. Level 2 data is something that you definitely want to have on your charts. Let's take a look at one of the best features about Tiger Brokers platform. I particularly like this one. That is the economic calendar. It's timely because, of course, we're about to go into earnings. You can select month, day, all of these types of things, but the best one has to be the fact that I like the weekly view. Why? Because I can click here, I can click dividends on. You know, we don't get dividends because we're traders. We don't hold it long enough, yeah? But we've also got IPOs, we've got report announcement, and we can select the countries that we want to see. So why is this helpful? Well, we can have a look at all the big announcements. Look over here. The month that we believe, or at least the week that we believe could be a big turnaround. Bank of America, Goldman Sachs, IBM, that starts off and kicks off the big earnings week for the banks, July 17th into July 23rd. This is the week that's going to be make or break it for the market, I believe. What do you guys think in the comments down below? Okay, well, let's go into the charts of what happened in the last 24 hours. One of the big things that happened was, of course, the Russell 2000 took over. And I mean, it took over. We saw anything to do with risk winning. Basically, the 2000 small caps, the Nasdaq, both did well. It's in line with what the community thought, what you guys were already sniffing out in the markets. The QQQ, the Nasdaq, is outperforming the SPY right now. Value versus growth, the market is picking up growth. And there is a reason why, and we'll talk about it just a little bit later. Let's also move over here to the sectors. Of course, any of the big risky sectors were doing particularly well. Clean energy, solar, interesting that we saw metals pick back up. That's because copper also picked up. We'll look at that soon. Semiconductors finding a little bit of a bid, which is nice. And the defensive sectors all taking a bath into the big jobs report. Interesting, they went negative on the defensive component. So definitely a rotation that's occurring there. Let's move over to the charts here and look at copper. Dr. Copper rebounds off that big resistance support line, the 200 weekly SMA as well. Big rebound. Could this mean that the economy is starting to recover? Basically, we had this incredible decline here in copper. I don't think it's a recovery so much as it's a little bounce after all of this huge selling. This is incredible selling. Dr. Copper, for anyone that doesn't know, any infrastructure build in the world or any of these really strong kind of, government incentives generally require a ton of copper to get off the ground because it's in most builds, wires, etc. And that's why you look at it, because if it's falling, it means that energy, it means that metals, it means that everything out is usually declining, or at least the economy is sick and the market doesn't like what it sees about growth in the future. Usually it's bad for GDP numbers as well. Now, let's have a look at the SP 500 versus US 10-year. We said we'd check this out. We were talking about the idea that when yields peak, maybe we're starting to find the potential of a bottoming market. Now, you'll notice here that the yield peaks about halfway through. So it kind of peaks halfway through this decline here in the US market. This is the 2018 to 2019 Christmas decline, October going through. Did it mark the bottom? No. But what it does mark is a big pivotal step and change in the way that the bank's policy is being read by the market. And this is very important. Remember, at the moment, if we look at it, the Federal Reserve is going to sharply raise rates. They're going to probably raise rates into 2023, somewhere around March, April, maybe even to June. They may even get to 3.4%, the market's telling us. But after that point, they're going to have to cut rates. So as we mentioned before, it's raise. Oh, we stuffed the economy, but maybe we've beaten inflation partially. Let's cut the rates now to try to support the economy and get it back on track. Once the Fed entered the market back in the 2000s, really with the Greenspan put, it really changed the system. So remember, it doesn't mean that we've hit the bottom, but if we start to see the US 10-year continuing to decline, it does mean that the bottom could be very, very near. And of course, that's very important because the markets aren't looking at data right now. They're thinking in the future. And that's why we're already starting to see a little bit of rotation into growth, because they're thinking a rate cut's coming next year. They've already sniffed it out, and that's what they're sniffing. Demand destruction, destroying. If we do end up creating, let's say, a fix to the inflation problem, which is a big if, then that's what they're starting to bet on. Dollar index, of course, the flight to the Dixie, the US dollar, is very strong. It's really the only safe haven out there in the markets at the moment. People have fled the euro, people have fled the pound, people have fled, of course, the Japanese yen as well, as the central bank really is manipulating that cash. And US dollars have been very strong. This is not usually boded well for the market. So if the market keeps going up and the US dollar keeps going up, I'd be questioning the S&P 500 and the stock market's moves at that point. Gold has suffered because of this, something about some supposed find of extra gold in the world. We'll find out whether that story is true. I haven't verified it. But if we notice here on the price action, it fell through a monstrous trend line. That trend line basically held through all of these previous points. So you can see here, there's the trend line, there's the fall through. At this stage, you can't really be looking at gold until we start to see some nice bottoming effects. We will follow it, but we're not going to spend too much time on it. Let's talk about here US oil. Well, US oil came down to a level that we definitely targeted, 95. We thought the demand destruction's there. Because copper's picked up, oil has picked up as well. It's back to where you would call role reversal. That's the 104. Support becomes resistance. There could be trades here if you wish to trade oil. I don't really like trading oil too much. If I do it, I tend to do it more with an option, just because I think it's a safer way of doing so. Fix your risk, that type of stuff. But at this stage, it breached through. It kind of looks like it might even be going towards a little bit of a bull run here on the oil. Remember, a lot of the big players, that is a lot of the bigger investors, have invested in oil and they're still holding it. So they must be doing that for at least some long-term reason. Tesla, great day for Tesla traders. They'll be pretty happy with it. Overall, it looks like the Twitter deal might be a little bit shaky from what I hear. The other thing is, and that's good for Tesla holders because it means Elon's coming back to the fold. He's putting all his pressure back on this stock. And 5.53% up, better than the Nasdaq in terms of return. And that's what it really is. If you think the Nasdaq's going up, Tesla might be your pick, just because the returns will be very, very positive. Now, have we got out of the problem zones? Not really. We still have a huge amount of supply up here. That's a resistance that we could reach. And we still have issues coming into the non-farm payrolls numbers. Somewhere around, probably around this 749 area is going to be a little bit of resistance. If the market does get up here, you could see it selling off. But ultimately, that's where you want to take it to if you can. Otherwise, you're just kind of descaling your positions. There is some risk here, or there is a little bit of risk. The real potential is maybe we move into the 15th. So just before the 15th of maybe July, we hit kind of a peaking of the market, and then suddenly the earnings don't live up to expectations. That's certainly a bit of a play. Watch the space, follow the Nasdaq and the SP 500 more closely. We mentioned rotation is occurring. Here is ARK. So that's, of course, Kathy Wood's fund. I like to just think of it as a mixture of hyperstocks. Hyperstocks versus SPY, so versus the S&P 500. We have had base formation. We've been talking about this for a little while now. It looks like it's basing and it's got the strength in it. 4.96%, decent volume through these lows, decent volume really for the last kind of little portion here. And that's probably telling us that we do have some strength here in the smaller stocks. Now, they're coming up to the first little level of supply here on the left-hand side in terms of just the ratio. I'm not sure if they can get through. I think the jobs numbers will be the catalyst either way for this one. QQQ versus the SPY. Let's just quickly zoom this out to show how big a deal this is. This is our huge channel that we bought up about a month ago, maybe a month and a half now. And we said, look, it looks like the Nasdaq in comparison to the S&P is bottoming. And this is a huge, huge channel. Now, if we scroll down to the daily and we actually get into the current price action, take a look here. We just made a new high. So we just made a new high ahead of the numbers as terms of a ratio. What's this look like? Some people will be saying it looks like a Wyckoff. It looks like a nice accumulation base. I would agree with you in most cases. It does look like tech is doing better than the value right now. We did the charts on that in the previous video. Go back and watch it if you haven't already. And I think it's a pretty interesting and cool zone for us to be watching. Certainly shows us that the movement currently is towards the Nasdaq. Let's move over to the DAX. It's teetering on its support, finding the best level of kind of demand it can. That is, buyers are coming back in, but realistically, it's quite weak. And that's because this is not really a technology market. This is more of a value market. We've got a lot of finance, a lot of energy, a lot of those types of metals, those types of engineering stocks, all sorts of things in the DAX. So this particular sector here is still very sick. And I think that we can watch the Eurozone here a little bit to see what's really happening underneath the hood from the perspective of everything that isn't tech. And of course, then we can make some better decisions based on that. Let's move over to the Nasdaq. It broke through our downward trend line, which is definitely a positive sign for it. However, we're at resistance ahead of the jobs numbers. Expect this resistance to be a big play here. If we get through this level, where do we go? There's a real potential that we move back up to 12,700. Wouldn't that be a cool level to be at ahead of earnings? Remember, the market is technically an optimistic thing. For anyone that doesn't know, the stock market actually goes up like 59 to 60% of the time. That is, if you went and bought every single day, 59 to 60% of the time, you'd be right. Now, that's a pretty interesting stat and actually means that it's probably better than some people's trading skills out there, unfortunately. But that hasn't happened this year. I think it's been more like 40% bullish this year in 2022. It's not always like that. But when we go over here and we consider, okay, we're optimistic, let's say the market's optimistic coming in, we end up here, let's say 14th or 15th next week ahead of the earnings. Well, couldn't that be a very logical scenario? I mean, obviously we're at resistance. Bears are going to try to push it through down here and get it down. But could we be at a point like this, testing this level here ahead of the earnings? I think it's a very possible scenario. And certainly if we breach through this big resistance here in the next 24 hours, maybe next week might have even more ramp in it. It certainly seems like retail traders are incredibly negative still on this market. And until they get positive, often markets will not drop. That's a big part of it. You know, if everybody's positive, then we've got to be worried. If everyone's negative in retail, then we can probably feel a little bit better. Remember the Warren Buffett saying, fear and greediness. We need to go through those steps. Let's look at the SPY. SPY hits basically a resistance, a little bit weakened because, of course, everyone's moving into tech, and there's more than just tech in the SP500. But it rallied back up, kind of hit a resistance. We're not quite on the trend line down yet, but we still have this huge gap that we could be filling. So a very important 24 hours here. We're at the resistance. We've been correct so far this week with our bullish bias here in the markets short term. And I'm hoping it's continuing on. There's no signs just yet to say resistance is going to be bearish. It's just resistance at this point. So we haven't seen the signs of turnaround just yet in these markets. Let's look at the futures market here at the time of recording. Obviously, we're just coiling here a little bit, finding a bit of base. Some people will take this as a double bottom or a triple bottom. They'll take the distance, they'll extrapolate that out, and they'll say, look, the best we can hope for is 39.25. I'm just going to say, let's find out what happens with the non-farms jobs report. I could easily see it do this, bang, then bang, like that. Basically move down initially, scare everybody, and then grab liquidity and move up. That's certainly a very logical conclusion. For bears to feel really happy in this market, there's a simple place that you want it to break underneath. Our defended zone. 37.40. Remember when gold broke our defended zone? It's fallen down significantly past that. I would say there's a lot of orders sitting behind here. And this was a huge amount of manipulation by Wall Street to pick positions, hopefully into a little rally here. Let's find out if it's true. Watch our weekend video to find out more. S&P 500, we've coming into the options expiration day. Looks like probably both of these aren't going to make too much money. Basically, max pain sitting at 380, which is underneath the current price in the market. So, of course, maybe they might want to push it down to that point. Not going to use that as a definitive yes or no. I don't know. Neither do you guys probably. 410 here as a resistance level. So this is the called levels. And then we've got that 370 for the potential support. And everything in here is just a joke. We don't know. There's no helping hands there. So if the market does rally, are we going to hit a 410 today? I doubt it. That's probably not going to happen during the US Friday session. But yeah, not too much help here. Where the help does come in maybe is the 15th. So on the 15th, you'll notice that we've got a max pain sitting at 393, which is, of course, above where the market is right now. We have quite a lot of 380 puts. So maybe there's some expiration going on here. And if you look at the puts moving forward in the next couple of months, there's so many sitting around 350. It's really interesting, and we'll continue to follow that story as we go. Bitcoin, nice little rally here, good break. Lucky for us, we kind of started talking about this being a fairly bullish kind of thing. Obviously, moving with the market at this stage because the Nasdaq, because the Russell 2000 are up, sentiment's coming back into the crypto market. We still have the danger zone though, so be very, very careful around 23,000. If we do breach 23,000, we could move very easily up until the 28s. And I think the 28 will be where a lot of people start to look to take some profit, get out of the thing, that type of stuff. Be careful here in Bitcoin. It's still stuck between two zones. And as we know, it tends to do something like that and often has like a trap in it before it really rebounds. So care needed, but very strong, kind of nice breakout, great candle formations down here. Congrats if you're in that and feeling good about it. If you haven't already, come and follow us at FX Evolution is the handle. So at FX Evolution. You can follow us on Twitter. Always great to have you there. If you want to join our private community, you can do so. Links in the description down below. And of course, you can also join our public Discord with 10,000 members in it. Link in the description down below as well. For the calendar for the week ahead, it's really just about the big ones. And if we go over here, we'll see it's the non-farm payroll change. Friday, 8th. This is basically 8:30 a.m. New York time. And when we go into the next week, check this out. We have a whole bunch of CPI numbers coming out. Then we go into PPI. Then we go into core retail sales. Oh, what a blockbuster 3 days that's going to be. I'm sure a lot of you are probably looking forward to the volatility that's going to bring. So if you haven't already, definitely check out the special offers down below. Remember, you have until the 12th of July if you're Australian and you're interested in opening up with Tiger Brokers to get the free Apple stock and other stock offers. Don't worry if you're from anywhere else in the world, there's plenty of opportunity down there as well in terms of special offers. And if you just want to check out that awesome platform, which has a great economic calendar and some extra features that we'll be looking at soon, you can do so. Thanks so much for watching, guys. Subscribe. Smash that like button if you enjoyed today's video. We'll see you on the weekend on the other side, and good luck on Friday. Bye for now.